When is the right time to raise your next round? In this episode of Capital Compass, we dive into the real signs that you're ready for another fundraise and the common traps that most of the founders fall into. Learn which metrics matter, how to read your runway, and how to build investor confidence before you really start pitching to them. When to raise again, signs that you're ready for your next round. In this episode of Capital Compass, we tackle a question that every founder eventually faces. When is the right time to raise your next round? It's not just about the runway, it's also about momentum, matrix, and market timing. First off, let's start with what founders often get wrong. Founders tend either to wait too long and run dangerously low on cash, or they raise too soon without really having a strong story. Both the things are risky. The common missteps here are waiting until you have less than 3 months of runway, or assuming revenue alone will get you funded, or raising before proving what your last round was meant to validate. So, runway is not really equal to readiness. Revenue is not equal to story. However, timing is everything. What are the 3 key signals that tell you that you're ready to raise? Here's what most of the investors want to see when you're coming back for more capital. First and foremost, your transaction milestone. Clear improvement in metrics from your last round. For example, if your last raise was to prove product market fit, now show retention, paid usage, or growth in sales. Secondly, your story progression. You can now pitch a stronger, more confident version of the same thesis. You've tested and learned, and you have the data that shows that you're moving towards scale. Finally, your runway strategy. You're raising 6 to 9 months before you run out. You're not fundraising from a place of desperation. So how do you prep for a successful round? As we have said before, to give yourself the best shot for a good raise, start preparing before you need the money. What you need to do is start investor outreach 2 to 3 months before you really want to raise. Send monthly or bi-monthly investor updates even to those who passed on your startup earlier on. And update your pitch deck, cap table, and financial model. Warm up your investor list early, keep them in the loop, and a great raise is all about timing and familiarity. And this brings us to the checklist. What is your fundraising readiness checklist? You need to have 6 to 9 months of runway left. You need to have clear traction since the last raise, strong narrative update, clean data room, warm investor list, defined round size plus the use of funds. Remember that if you can check most of these, you're likely ready to hit the market again on your own terms. To sum it all up, raising again isn't about bank balance. It's about how well you have used your last round to de-risk your story and strengthen your momentum. Don't wait until you need money. Fundraise when you have a good story and enough time to run a strong process. This is a Capital Compass series. New episodes drop in every few days, so do stay tuned for more. And if you're raising, do submit your pitch deck to pallavisehgal.com/submit pitch deck for potential support, review, or feedback. Thank you.